Good afternoon, everyone. Thank you so much for taking the time out of your Saturday to join us in this webinar on reviving value chains in Southeast Asia post-COVID-19. So this webinar is hosted by CIPS, Center for Indonesian Policy Studies, based in Jakarta, Indonesia, as part of the Friedman 8 Digital Conference. Hopefully the Saturday will be a fruitful weekend activity for you, and we hope you're all safe and healthy wherever you are. My name is Felippa Amanta. I'm from Center for Indonesian Policy Studies, and I'll be this afternoon's host and moderator. Before we start, I'd like to remind everyone now that you're on mute, but as Emilio said earlier, we definitely welcome discussion from you. You can pop your thoughts or comments or questions in the chat box anytime. We'll definitely be looking at that. But at the end of the session, we'll be having a question and answer session where we'll look at the chat box and answer some of the questions. All right, so let's just get started. This webinar will be talking about value chains in Southeast Asia. As we know, the COVID-19 pandemic has disrupted global supply chain. The World Trade Organization estimated that world merchandise trade is set to plummet by between 13 and 32% in 2020 because of the pandemic. In addition, the International Monetary Fund also predicts that world output will contract by 3% this year, and growth in ASEAN countries are predicted to be either flat or negative. So we want to have discussions about how are Southeast Asian countries impacted. How are we able to move forward from this point on? We are joined today by three esteemed panelists from across the region to answer some of these questions. We have Andree Surianta, Associate Researcher at Center for Indonesian Policy Studies, or CIPS, in Jakarta, Indonesia. We also have Dr. Jayant Menon, Visiting Fellow at Institute of Southeast Asian Studies, or ISEAS Yusof Ishak Institute, based in Singapore. And we also have Zhou, Research Manager at Institute for Democracy and Economic Affairs, or IDEAS, based in Kuala Lumpur, Malaysia. So all of these panelists from Indonesia, Singapore, and Malaysia, they have great perspective on both the respective countries and also the region. So I'm very much looking forward to having this discussion with all of you. So this event will be hosted in a talk show format. We'll start with a brief opening from each panelist first to give the overview of what they think of the value chains right now. And then it will be followed by a discussion between the panelists. I have prepared a series of questions that we're going to discuss. But don't worry, to the participants, at the end, we'll also open the floor for attendees to ask questions. So as I mentioned, definitely drop the questions in the chat box as we go on. All right, so without further ado, I would like to get this discussion started. So our first speaker today to give the introductory remarks will be Mas Andree. Mas Andree, you have about 5 minutes to give your presentation. And please get us started. So how do you think COVID-19 has impacted global value chain?
Well, thank you very much, Pippa, and thank you everyone for participating today. I'm very honored to be here with Dr. Jayant and Lau as well. Look forward to seeing your presentation as well. So let me just share my screen first. It's just a very short presentation that I've prepared as an opening remark. So I suppose everyone can see the screen now?
Yes, perfect.
Okay. So yeah, today we'll be talking about value chain restructuring in COVID-19. And first of all, I think we all know how COVID-19 has created chaos to the global value chain. And basically, supply shock meeting with demand shock created the perfect recipe for economic crisis. Pippa already mentioned how international trade will shrink. And aside from that, international investment also has been predicted to contract by 30 to 40%. In the middle of all this, the multinationals, the corporations, they are affected by China shutdowns. They're looking for supply chain alternatives. And many of these are looking at Southeast Asia. Right? There's a lot of talk about reshoring and nearshoring, especially in the government circle, trying to shorten the supply chain to improve its resilience. So next, I would like to look at ASEAN itself in terms of the global value chain perspective. Now, ASEAN has actually been doing quite well in terms of participation in GVC. As you can see on the chart on the left, ASEAN participation is higher than the world's average and second only to the European Union. But if you drill down to each member states, then this participation starts to look to be varied quite widely. The highest is Singapore and Malaysia at above 60%. I think Singapore was even 70. And Vietnam also at 60. And then the rest is sort of like 50% below. Okay. When we look deeper into the Indonesia perspective, because I'm from Indonesia, so I'll be talking about Indonesia. Indonesia actually has been retreating from the global value chain. If you see this chart, this is all goods and services sectors, and the white diamond is data of 2005, while the blue bar is 2015. You can see that almost across all sectors, virtually across all sectors, there has been a decline in the participation, right? So Indonesia has not been getting involved in the GVC, actually more focused on the domestic market. And foreign direct investment is a really small part of Indonesia economy. You can see here, this is also sort of across ASEAN. The average FDI net inflows for 10 years as a proportion of GDP. And Indonesia is very low, about like 1.95%, the second lowest in ASEAN. Of course, Singapore, we all know, has very high FDI. And the second is actually Cambodia and Laos, probably because the base is quite low. The GDP is probably low, so then the FDI proportion is a bit higher, right? Vietnam, as you can see, also have quite a good proportion of FDI in their economy. So I think in terms of reviving the global value chain, ASEAN is already in a good position. And what might happen is actually regionalization will intensify and the global in the value chains become more regional, actually. So ASEAN is pretty well placed for that. But of course, as you can see, the distribution is not equitable. I mean, it's not equal for everyone. So there might be some pushbacks from member states and asking for a way to make this more equitable. So the question is whether it is really possible to raise the bar together. And I leave it at that, and I'll look forward to the discussion. Let me stop.
Great.
Here.
Thank you very much, Pak Andree, for that. Quite an optimistic outlook that ASEAN right now is in a good position to recover in global value chain, but with just some concerns to be aware of. And then next up, we also have Dr. Jayant. The COVID-19 is not happening by itself, but it's happening in the middle of a US-China trade war as well. So perhaps Dr. Jayant, now you can share a little bit of your perspective of how global chains in the current pandemic and the trade war will look like. Dr. Jayant, the time is yours.
Thank you, Felippa, and thank you for having me here today to be part of this event, and also welcome all your participants. So as you mentioned, I think what I'll try to do is complement what Andree just said and focus in a bit more on the impacts of the US-China trade war. And I'm just trying to get my PowerPoint up. Yeah, I think you can all see that. And I'll start off by providing a bit of an overview of how global value chains have been evolving and how they are impacting us, and then hone in a bit on the US-China trade war and how that is going to impact on the restructuring that Andree spoke about that could happen in this region. So I think the first point to note is that global value chains are very important in the picture of global trade today, accounting for almost half of global trade. And that's not the full story. this type of trade in product fragmentation trade, as is often called, is also quite useful as a development tool in reducing poverty. It's estimated that a 1% increase in this type of trade can increase per capita income levels by just over 1%. So this is double what conventional trade can do for us. And these estimates are from the World Bank in their latest World Development Review, which I recommend everyone take a look at if interested in this topic. So GV, global value chains, are important for growth as well as for helping poor countries develop. But as we have seen in Indonesia, but also generally globally, and especially in the ASEAN region, there's been a slowing down of the GVC share in total global trade. You can see that leading up to the global financial crisis of 2008, this has been happening, and this trend has continued. And I think in this respect, we should remember that quite a few of these trends have been in place prior to COVID-19. It's only human nature to try and blame everything on the latest event, in this case, COVID-19. But many things were happening already prior to COVID-19. And COVID-19, of course, may increase the pace and the extent of the adjustments, but you cannot attribute all of these changes just to COVID-19. They were already taking place in many cases leading up to the pandemic. So let me now move on to the second part, which is the US-China trade war. And I think for this region, this is arguably the major factor affecting global value chains. Now, the thing to remember about this trade war is that it is a very resilient conflict. The focus has shifted already from trade to intellectual property, to technology, to politics. Now even the pandemic has become a new source of friction in propagating this conflict between the US and China. And the reason for that is quite simple. These are just symptoms of an underlying struggle for global dominance. The US is the prevailing hegemon, and any new pretender to the throne, like China, is going to find itself facing a lot of friction and resistance. And that's what we will see playing out for a long time going forward. And it will not end with the trade war. It will find new forms of expression, the latest being the pandemic. So again, the restructuring that's taking place because of the trade war is not just due to COVID-19. COVID-19 will increase the pace and increase the extent, but it started long time back when wages started rising in China, and also when environmental regulations and other rules were tightened in China after it joined the WTO. Now, these things are ongoing processes. In fact, the very nature of global value chains is that they keep shifting and changing, and this flying geese pattern, as it's called, involves moving from country to country as wages and other factors change in the home country. So COVID-19 is hastening the pace. But what I want to highlight in my presentation today is how even a very small tariff like the one we have seen, can have major impacts on value chains because it depends on the value added share. Now, the reason for this is that the tariff is applied on 100% of the value of the product, right? But the amount of the product that is actually made in China is usually just a small share. But it's that small share that triggers the 100% of the tariff on the value of the product. So if they could remove just that small share, they could remove the whole tariff on the full value of the product. So in other words, the effective protection, not the nominal protection, is provided as a multiple of the value added share. In fact, if the value added share is 10%, the effective protection becomes 1 on 10% or 1 on 0.1, which is 100%, right? 10 times the actual tariff. And the second point is that it's not just provided to the US, it's provided to any country that competes with China for that activity within the value chain, right? So that's the special nature of global value chains. It's the tasks involved in the process that are shifted around the place quite easily, and the effective protection provided is huge compared to just the nominal tariff. Now, in this table, I've estimated using the ADB's input-output tables, the value-added share for manufacturing for 2018. For manufacturing in 2018, for China's exports to the US. These are so-called made in China products. But if you look at the last row, which I've bolded for total manufacturing, that number, 30.9%, that is the average value added in manufacturing for products classified as made in China being exported to the US, right? So less than 1/3 of the value is actually from China, right? For these so-called Chinese exports, right? So if you look at that number 81 there, that is what the effective protection is on if the tariff is 25%. So it gets inflated up to 81% because it's more than 3 times the 25%, because the value added share is about 1/3, right? So that's a way to think about it. And so again, a small tariff can have a huge protective effect. And so it can cause a lot of restructuring, right? So Vietnam, for instance, if Vietnam can do the same activity that's going on in China right now, for less than 80% the increase in costs in China, it makes sense to move it from China to Vietnam to avoid the 25% tariff, right? So this creates a huge buffer for competing countries, mostly in ASEAN, to attract investments, global value chain investments away from China into their home countries. And so in a world of global value chains, a small tariff can provide huge benefits to competitors and can result in quite significant restructuring of global value chains. And I think we've already seen that happening, and the reason for that is because of this multiplier impact, and because the value added share in Chinese-made products is usually around 1/3 or lower in some cases, sometimes a little bit higher, but certainly a lot less than 100%, even though the tariff is applied on 100% of the product. So with that, Felippa, I think I'll stop there and look forward to your questions. Thank you.
Thank you so much, Dr. Jayant, for that fascinating observations and also your estimation. Thanks for bringing powerful data just to give an idea of what it really means, this restructuring. And talking about restructuring, I want to move to Lau from Ideas in Malaysia. Dr. Jayant mentioned about restructuring away from China, and I was wondering if now you can talk a little bit more about that. So Lau, the Zoom is yours.
Thank you very much, Felippa. Good day, ladies and gentlemen. Very happy to be part of this conversation. Let me just start by sharing the screen. I've prepared some slides here. Okay. Can you see that, Felippa? Can you see that all right? Okay. So maybe I should just start by asking the question, really. Do we expect to see the more recent waves of companies relocating from China and entering to ASEAN? Will these create the forces of convergence or divergence in trade policies? And I would like to echo what Dr. Jayant was saying. There were already previous waves of companies, multinationals leaving China. As we know, FDI is declining globally. FDI has become scarce. Will this mean that ASEAN member states compete against each other to secure this FDI, and what does this mean to the future of ASEAN as a single market? Let me start by asking a question. For multinationals that are leaving China, who are thinking of leaving China, why do they leave and where do they go? Perhaps some MNCs chose to stay because they're serving the Chinese market. Maybe some are in services which are not so easily tradable, so they perhaps would choose to stay. I suspect some companies would be looking for a new manufacturing hub in ASEAN or as a backup to the Chinese supply chain ecosystem. Some of them are perhaps addressing the issue of rising costs in manufacturing in China. Some of them could be responding to the US-China trade war. But let's not also forget that we are seeing Chinese MNCs expanding abroad as well. Can ASEAN supply chain ecosystem replace the Chinese one? We will look at the value add that's produced domestically. I've prepared some charts here. If this chart says if there's higher domestic value add share, then you will, in reverse, you'll see lower foreign value added share. If I can just point to you the main highlights here. On the left would be the figures for 2005 and the right would be the figures for 2015. And I am looking at manufacturing. I will split manufacturing into low R&D intensity and high R&D intensity, which is in the next slide. ASEAN as a whole, we are increasing our value add domestically. But if you look at countries like Vietnam, for example, we are seeing a fall in the share of domestic value add in sectors which are categorized under low R&D intensity. So this will include food apparels, textiles, tobacco, food produce. And also Indonesia, we have seen an increase in domestic value add share. So this is consistent with what Andree was mentioning just now. Let's look at some of the figures for high R&D intensity sectors. So heavy manufacturing, automotive will probably fall under this as well. Again, we are seeing Vietnam experiencing a huge drop in domestic value add, which also means that they are increasing their foreign value add. And this would create issues to Vietnam products if they intend to sell it to the ASEAN buyers, because as we know, ASEAN member states, we are under this ATIGA trade in goods agreement. If there's this rules of origin at 40%, so if in your produce in your products, if you rely too much on foreign inputs and intermediate goods, or you're buying too much from outside of ASEAN, you could be slapped with high ASEAN trade if you are selling to Malaysia, Singapore, and the rest of the ASEAN member states. We are seeing this thing happening very clearly in the automotive sector, for example. So multinationals who are thinking of leaving China and invest in ASEAN, selecting a hub for manufacturing, they would be thinking, is Vietnam going to be competitive if they have to face with huge tariff? Malaysia has seen increase in domestic value add. So this could mean that we are producing more higher value added products and services, products. And Indonesia, quite generally, has increased its domestic value add share as well. Okay, so we try to run some numbers very quickly. What we have done is that we have taken the total value add and divide by output and take it as a proxy for productivity, and we benchmark it against ASEAN 5 plus Vietnam. The green colors, let's just ignore the numbers. Those in green would just mean that Indonesia has greater productivity against its ASEAN counterparts. As you can see, there are a lot of greens for Indonesia. In a way, you can say that Indonesia is quite productive against its neighboring countries in all these sectors. But why haven't we seen a lot of FDI inflow into Indonesia? So there could be two things here. Maybe multinationals are not looking at cost alone. There could be other factors which they are considering. And also because perhaps Indonesia has a lot more room to improve when it comes to the barriers to attracting FDI. Similar patterns as well for manufacturing, high-tech manufacturing subsectors. A lot of greens for Indonesia, but you see a lot more perhaps FDI inflow for, say, Malaysia, Thailand, and Vietnam, especially for Malaysia, Thailand, and Vietnam, who I think have so far been able to flatten the COVID curve much faster than other ASEAN neighboring countries. Convergence or divergence, let me just show the GVC participation. What I've done is that I add the backward and forward linkages together, and Indonesia is trending downwards, quite similarly for Thailand and also Malaysia as well. But for Vietnam, there's a surge, I think, in the GVC participation, not too inconsistent with what Dr. Jayant was saying just now. But if I look at the regional value chain participation, so the regional value chain will be a subset of the global value chain. If we look at the RVC, look at Vietnam in red, that huge slide, that slide probably suggests something more long-term, something more structural. Does this mean that Vietnam is pursuing a policy that is perhaps less convergent than the other countries? Similarly for Thailand as well and Indonesia. But for Malaysia, we are seeing an uptick in the past 5 years, 5 to 10 years. This is a screenshot of Chinese investments in Malaysia. What I'm trying to say is that Chinese multinationals have been moving into ASEAN states since the launch of the BRI, and the idea is to make this different market as a springboard to serve the wider region market. But there can only be one single hub. So are we seeing a case of ASEAN member states competing against each other to be the chosen hub? Let me just point to just two companies here that's worth highlighting. Alliance Steel is a Chinese state-owned enterprise in steel manufacturing. We are still a net importer. Malaysia is still a net importer of steel, but we have produced a lot more steel now. We used to produce perhaps 300,000 metric tons per year, and now we are looking at 1.8 million metric tons a year. Of course, it doesn't make sense for Chinese SOEs to produce that much steel just to serve the Malaysian market. The idea is to really to serve the ASEAN market by using Malaysia as a launch pad. The other company, CRRC, and again, it's another Chinese SOEs. They produce train. It's a rolling stock company. They produce wagons, anything that moves on the railway. Again, it doesn't make sense to produce trains for the Malaysian market. The idea is to serve the ASEAN market. As we know, ASEAN requires a lot more investment in infrastructure. And this is where China is looking at. What we've gathered so far is that they hire local workers, but the same cannot be said for the ASEAN workers. So when we are not sure if there's a lot of human movement, human mobility happening intra-ASEAN. We know that we are procuring resources from both China and Malaysia. Again, we're not sure if this is helpful to strengthen the regional value chain. Could it be a case where if this thing is happening, what we've gathered, what we've benefited at the end of the day is that the host economy will be having a lot more DVA, domestic value add, but less benefits for the other member states in the region. So is this a force for convergence or divergence? Looks like it's a force for divergence to the ASEAN integration. So I'll probably just stop here and I look forward to receiving the questions.
Great, thank you so much, Lau. Let's just jump into the discussion straight away. And since we ended with Lau talking about Chinese investments moving away and coming into Southeast Asian countries, I wanted to direct my first question to Lau as well. Investment sourced from China is sometimes received with skepticism. And Dr. Jayant also mentioned in his presentation, this is not just trade war, but it's a political war as well. So do you think that should Asian countries be extra vigilant about it, or is this concern a bit overblown?
I think when people talk about the Chinese economic presence, they don't really just talk about investment the way we understood, like manufacturing, greenfield investment, because they would sometimes confuse things like procurement and construction as well. I think that's what people are really talking about, the focus on mega infrastructure projects like railroad, even property construction, industrial parks. And these mega infrastructure projects usually entail a G2G drive, and it will usually entail the Chinese SOEs when it comes to actually building it and operating it. This could be quite problematic in the sense that there is question about the use of corrosive capital, where the weaknesses in the host country's governance system is being exploited, or the lack of governance in the financial system is being exploited. The issue of lack of transparency about fiscal accountability, about the environmental concern, we can see that happening in Malaysia as well. If you look at the East Coast Railway project, where instead of going through standard procurement procedures, there wasn't a tender bid to start with. It was a direct award of contract to the Chinese and also the Malaysian SOEs. And what makes this more complicated is that this then is linked to the 1MDB scandal that implicated the former Prime Minister. So the lack of transparency and the lack of accountability is the source of concern, I think, for the host economies. And also sometimes ASEAN member states, they would look at the Chinese investments and see it as a boon, as a source of economic stability, because for ASEAN, I think sometimes economic stability also mean political stability. So there could be a huge taste and appetite for Chinese investment. We see that happening in Philippines, where the government has this build project, trying to increase the amount of construction and mega infrastructure. But over the years, I think governments in ASEAN have started to realize that there is domestic political cost. It's showing up in the polls, and therefore I think ASEAN member states have started to rebalance. I think to strike some form of balance between the higher developmental values of projects in manufacturing, which is quite crucial to promote higher value added products and services and also productivity. So let's not confuse the two, the ones which are more highly developmental and the one that's more procurement related. But what can ASEAN do? I think at the end of the day is to agree on a set of principles or a set of rules so that we draw a line between what is perhaps right or wrong, for lack of a better word, what is a red line when it comes to procurement policies. If not, then we'll always be in this chasing after capital at the expense of accountability and governance.
Thank you, Lau. Next question I wanted to pose to Pak Andree. Pak Andree, in your presentation, at the end of your presentation, you asked a really important question about, can we raise the bar together in ASEAN? As you mentioned, we're moving different speed with the GFCVC participation, and Lau also highlights in the end of the presentation, we're actually looking at more of a divergence trend. So what role do you think does ASEAN Economic Community play, or can it play any role to create or to ensure that the benefits of value chain are shared equally among the member states?
Yeah, thank you, Felippa. And yeah, I think Asian Economic Community has been around since 2015, right? And it's supposed to create this one integrated market in ASEAN. And but as we all started from each country started from a different starting point, right? So it's very difficult if everyone, like Laos said, continue to just compete. Like if the default stance is compete between member states, that's going to be difficult. I actually see that the AEC needs to be strengthened in a way, right? It needs to be made stronger, and this will actually create a bigger bargaining power, right? When you're looking at the geopolitical conflict and the economic that has become geopolitical conflict now between US and China, these are two really big powers, right? And each member states by themselves, even Indonesia, which is the largest, will have it really hard to bargain in this situation, right? Like it's increasing now, becoming you have to choose sides. It is becoming to that extent. So, but if you're in ASEAN, right, if you move together as a group, then I think we'll have a better chance of really trying to get the benefit out of all this trend. And in terms of whether this can be done together, I do think that harmonization between the member states then becomes the key. The harmonization of trade and investment rules, right? And ASEAN is different than EU. EU is basically, the European Commission is very strong and they manage everything in the European countries. A lot of things, governance structure is delegated up the Commission. ASEAN is not like that, right? We maintain our own borders, we maintain our own regulations. So harmonization now becomes the key. I think that should be the step to really have an activity to really harmonize everything. So then we can move as one sort of coherent grouping. So that's my opinion. Thank you.
Thank you, Mas Andree. I will pose my next question to Dr. Jayant. Even though ASEAN Economic Community harmonization sounds like a good dream, right now the fact remains that a lot of countries are still competing for this. In your opinion, which Southeast Asian countries do you think are at the best position to benefit from this restructuring that's happening, and which countries are lacking behind and should really be increasing their concern of getting left behind?
Right. Thanks, Felippa. Yeah, I guess, in ASEAN, we've already heard earlier how, countries like the Philippines and Indonesia have been laggards in the global value chains as far as the original members are concerned. And so they have an opportunity to try and catch up with a lot of this restructuring taking place. But they will need to deal with, the reasons why they've been laggards so far. I mean, the fundamental underlying reform issues that is required, to improve competitiveness, to improve infrastructure, to reduce costs, etc., which is limited participation in the past, are still present. They might be falling, but they're still there. On the other hand, countries that are already in value chains like Malaysia and Thailand, and increasingly Vietnam now, are already ready to increase their role. And I think they will see perhaps the largest increases of a dwindling overall inflow, as has been highlighted. FDI will contract sharply this coming year as we go through this, very deep recession globally. But with that in mind, taking that into account, there's still a lot of redistribution, restructuring that will likely take place. And I think Vietnam is already now the winner amongst the ASEAN countries. They've benefited already the most. Malaysia is second. I think Thailand probably will come in third. And so it's up to the other two countries to catch up. But also the newest member countries, the Cambodia, Laos, and Myanmar. Cambodia and Laos especially have already started receiving some GVC investments as part of this, Thailand +1 or China +1 policy of Japan to try and diversify risks. Global value chains are fabulous things. They produce great benefits through efficiencies, but they're also very fragile things. One small chink in the armor, if it breaks down in one country, the whole chain could collapse. So to diversify these risks, the Japanese and also Korean investments have been moving into new countries, new member countries, and there's a lot of room there to grow as these countries also reform. And I think Myanmar is the country with the largest population that's yet to benefit from that group, and they could benefit, but Laos and Cambodia, especially Cambodia in their special economic zones, have seen significant increases. And both these countries actually have strong ties with China. And so they would be hoping to increase investments from China as is happening in Vietnam. So so a varied picture. The countries that have been laggard amongst the big original group will stand to benefit quite a bit if they improve their game. They need to do a lot more to improve their cost of doing business and their attractiveness. Existing players, Malaysia, Thailand, and also Vietnam, will benefit the most, I think. And then the newest member countries will be seeing some increase. These are small countries. It doesn't take much FDI to make a big difference in those countries. And I think we'll see very sharp increases in their growth coming from restructuring. And once this pandemic is over and growth returns, they will benefit even more.
Sorry to interrupt. Just to let you know, this is from Sydney office. You've got 10 minutes left on on this session. So if you want to wrap it up in 10 minutes, I'll just let you do that.
Sure. Thank you so much. Yes, we'll move on to question, and I'll invite everyone to also post questions in the group chat. But we do have some questions coming up right now. I'll pick one, and I'll post this to Dr. Jayant as well. But then Andree and Lau, if you want to jump in and add your comments, feel free. So as we know, India and China are currently facing border conflicts, and India also have decided to leave RCEP, the Regional Comprehensive Economic Partnership. So what do you think about the impact of India's exit on the realization of RCEP endorsed by ASEAN? Do you think that we can still move ahead with RCEP?
I think the short answer is yes. India's pulling out is very unfortunate. This would have been a great opportunity for India to try and increase its participation in global value chains. It has also been very much outside that whole process, and it could have used this as a lever to greatly increase its presence in regional and global value chains. But I think because of politics at home, this looks unlikely now, and everyone will be worse off as a result. But India will be the worst off as a result. So that's very unfortunate. And I can't see this changing, unfortunately, as long as the Modi government remains in power, because there's too much at stake in policy reversal. It's too politicized now for that to change. So the RCEP 15, I think, will go ahead. They will conclude the agreement, and they are still, a substantial group. They will be the largest free trade agreement in the world when concluded. And I think this is an opportunity to actually do a lot of the harmonizing of rules that we've discussed already within this large bloc. And ASEAN will be stronger, being in the center of this larger grouping. And hopefully, India can come back sometime in the future.
Let's hope so. All right, next question. We have an interesting question, and this touches upon Indonesia and Malaysia. So I'll post this for both Lau and Andree. And perhaps we can start with Andree first. So this is from Andrew Mitchell. An earlier session in the conference spoke about how Western countries mistakenly believe trade and investment would make China liberalize, which is not happening. And then investors in ASEAN countries could be worried about political Islam, especially in Indonesia and Malaysia. And that Indonesia or Malaysia may also move in an anti-liberal direction. Is this a legitimate worry?
Sorry, should I go first, Felippa? Because I dropped out a little bit just now.
Yes, Andree.
Okay. Yeah, I think Indonesia is very keen on selling its brand of Islam to the world, to be honest, and it's the Islam Nusantara, right? And this is the version of Islam that's viewed as tolerant and very democratic in a way. So, and I think that's still the majority, or sort of like the mainstream that's around at the moment. Yes, we do see a lot of I think like the Wahhabi Islam and things like that, because whenever there's bad things, it tends to hit the news very fast, right? So but I don't think that represents the whole Indonesia. To be honest, we're still very diverse. We're still very tolerant. Like the biggest democracy, and our election went through relatively peacefully, and actually probably the most peaceful democratic election, if you despite the debate on religion, right? So the government is doing all they can to watch over that space, and just trying to maintain sort of like democratic and freedom of speech like especially in the religious space. So I don't see that as a concern in the short term, to be honest.
Thank you, Andree. And what about Lau? What do you think in Malaysia? How's the context?
Well, I'm afraid I'm not an expert in this field, but I think what I'll just say is this: I think we see a lot more discussion about race and religion in Malaysian politics. That's more because of the competition between the elites, the politicians, and they're using these issues as a way to garner votes. But I don't see Malaysia in the short term, at least, where we will have a hard shift to the more conservative Islamic brand. But when it comes to economic and trade policies, I think there's quite a consistency, a lot of consistencies when it comes to our policies. There's no evidence yet of seeing how a stronger Islamicization affecting the policies.
Thank you so much, Lau. All right, we'll be ending soon. We have about 3 minutes left to go. So I'll have one last question then to all the panelists, if I may. Just a very quick question and answer. If you can give a recommendation on those countries that are lagging behind now, and maybe biased because I'm from Indonesia, so I would be keen to hear your thoughts on if you can recommend one thing for the countries in order for them to benefit, what would that be? And I'll perhaps start with Lau first.
Well, I'll just respond. I'll just answer for Malaysia.
Yes.
I think what happened with the recent crisis, the COVID-19 pandemic, is that we are seeing a lot more usage or utilization of SOEs. We believe in a market-driven approach, but then this crisis has invited us to reconsider our stance a little bit. But if we continue to see huge government presence or SOE presence, we have, I think, long-term concerns over productivity and increasing our value add. So I think the issue of the presence of huge presence of government in the economy.
Okay, thank you, Lau. And then Andree, what about Indonesia?
Sorry to interrupt very quickly, just here from the Sydney studio. We actually have to end this live stream to get on to the next. However, I'm not actually going to kick you all off. We are able to unmute everyone and make this more of a free-flowing conversation. Felippa, if you're happy for me to do this, I'll just make you the host, and then we'll move on to the next chat. Whenever you feel it's appropriate, go ahead and unmute everyone so everyone can have a chat, stay as long as they'd like. But we'll definitely be moving on to the next breakout. But we really want to show our appreciation for the conversation. This has been amazing and informative, and we're just so grateful that you took the time to be with us. So thank you so very, very much.